So as promised, this is part 2 of my 2-part series about FHA and the different loan modifications that are out there right now. Now, the government on July 23rd passed a bunch of new rules, basically completely changing all of the FHA programs that existed before for loan modification and implementing three new programs for people who are in forbearance and who are unable to pay their mortgages. Now, what is really happening here? What the government is trying to do is they're trying to slow or stop a foreclosure wave. These programs are very different than any other mortgage modification program that existed in the past. In the past, FHA, all these different programs required a big stack of documents and documentary proof of a lot of different things involving your income and other things, your bank accounts, that sort of thing, your taxes, in order for you to get a loan modification. They've removed that impediment for people to get loan modifications, and they basically said, if you ask for it, you get it. Now, the problem is that these three new FHA programs are a little bit complex in that they require you to understand where you are in the process in terms of default, non-default, if you're late, if you're current, in order to know what to ask for. Now, the government is supposed to just basically tell you and give you, not the government, I'm sorry, the servicers are being told by the government to basically just give you what it is that you require, but it's good for you to understand what it is that they are doing and for you to be proactive and be able to ask for things. Remember that the squeaky wheel is the one that gets the oil, not the one that stays quiet. So, again, my name is Diego Mendez. I've been doing this kind of law for 13 years. And I have my channel, which is Debt Law, Survival Guide for the Desperate Debtor. And if you like and subscribe and turn on the notifications, which is really important in these situations for my channel, I promise you that I will be the one that tells you as soon as I have information that I'm going to tell you, okay, this is the new FHA rule on loan modification. These are the things you can qualify for, and I can give you some general advice and some guidance as to what you can apply for and what you might qualify for that's different than what you knew in the past. It's very important. These programs keep changing. This is, I think, in July, there were 2 programs that were announced, so we have no idea what new things are coming in the future. So, the big thing for you to understand right now is that depending on your status as to whether you're current or late is what you qualify for. We're going to get into all that stuff in about 5 seconds. But again, like, subscribe, turn on your notifications, and we will get to all the information that you need to understand your new FHA loan modification. So as I explained, the biggest thing and the biggest way to understand what you qualify for is your status. Now, your payment status. So what do I mean by that? And we talked about this in the first part of this episode. If you haven't watched it, you can watch it, or you can just watch this because I'll get into some of it here. If you are 90 days late or more, then you qualify probably for the Advanced Loan Modification, COVID-19 Loan Modification, which is in my opinion, the Cadillac of all loan modifications, because it does magical things for people who were in default before or after or during COVID. It makes these folks very quickly, it reinstates the loan. It's a beautiful thing. You are now reinstated. It gives you a partial claim, which means it takes whatever amount of money you owe on forbearance or some other amounts, which could be greater than what you owe on forbearance, and put it at the end of the mortgage. This is a beautiful thing. It creates a new lien of all the money that you owed and put it at the end, and it shoots for a 25% reduction in your principal and interest payment, which again makes the mortgage more affordable, and it does not require documentation. This is a beautiful, perfect loan modification in my opinion. It says, here you go, here's your new mortgage, 30 years, new interest rate, doesn't matter. here's your payment, 25% less than what you were paying before, principal and interest. Obviously, it doesn't affect your escrow, but they do shoot for a 25% reduction in your principal and interest. And there you go. You now are reinstated and have a happy life. Make sure you pay your mortgage. It's a beautiful, beautiful loan modification. Now, the next group of people that we got to talk about are people who are in forbearance. These folks are not considered late. Remember, if you're in forbearance and you were current when you took the forbearance, then you're not considered late. What you want to ask for and what you qualify for is something called the COVID-19 Recovery Modification. This is something different than the Advance, even though it does the same thing. It gives you a partial claim. It gives you 25% reduction in principal and interest, and there's no documents required. There doesn't need to reinstate your loan because your loan has never been in default. So this is again a very beautiful loan modification, because as long as you tell them that you cannot pay your mortgage coming out of forbearance, they say, okay, here you go. The only downside of this, and the only people that I would think might want to reconsider doing this, are people who are close to paying their mortgage off, because this restarts the clock. This is it says, if let's say that you're 10 years in, so you only have 20 years left on your mortgage, now you have 30 years left on your mortgage. It adds whatever amount of time, up to 30 years, to your mortgage. If that matters to you, which it does for a lot of people because they're trying to pay off their home, then don't do this. Now, if you truly cannot pay your mortgage, and you want a lower payment of your principal and interest, 25% reduction, then go for it. But remember, it restarts your mortgage, which is something that a lot of people don't really think about. But you're going to end up paying a lot more interest overall in the life of the loan. If that's something that's important to you, if you're one of these folks that's trying to pay off your house, then you might want to reconsider this. But if you're looking for the lower payment, then go for it. Now, the last group of people, and these are the people that are forgotten many times, but there is a carve out for non-owner occupied FHA mortgages. These are people who don't live in the property. These are people who are landlords. This is called the COVID-19 Recovery Non-Occupant Loan Modification. It's different than the occupied loan modifications because of a couple things. First of all, it looks to reinstate your mortgage, which is beautiful, but it could increase your payments. The interest rate might go up. It depends on a complex mathematical formula. The point of these mortgages isn't so much to make it more affordable, it's to reinstate mortgages that are in default. So it's a different focus. But if your rental property is something that's important to you and you want to keep it and you haven't been able to pay it for a while, then this would be the way to go for it. The other problem with this one is this is an old style loan modification. It requires, these are documents that they're going to require documents, which means that they are going to ask you for proof of rental income, your bank statements, your taxes, all that stack of stuff that nobody wants to produce. Well, they're going to ask you for it. So you're going to have to get your accountant involved, and you're going to have to get different people to help you probably. So those are the things that are available right now. Now, like I said, if you are in a forbearance, you have a very good chance of getting a lower payment if you need it. If you want to extend your mortgage out 30 years, up to 30 years more. Up to 30 years, depending on how many months, how many years you're in. If you are in default more than 90 days, then you have no choice, because unless you come current by paying the mortgage, the money due, then taking the advanced loan modification would be the way to get your loan reinstated and get out of foreclosure. That is a beautiful thing. I've never heard of that. That is something that does not exist in this way. This is a gift. If you are in a situation that you're in foreclosure, go running to your foreclosure lawyer or call the FHA today and get yourself into the advanced loan modification, because that's how you're going to save your home. This is a huge deal. If you need the lower payment, then you can do, and you're in a forbearance and you're current, then you can try for one of these, for the Recovery Loan Modification. Now, again, these are for FHA. If you don't know if you're FHA, I did a whole video on that, which is right here, which is part 1 of the series. But you probably do know your FHA, and you know that these programs, now you know that these programs are out there. Again, my name is Diego Mendez. I'm a bankruptcy loan modification foreclosure lawyer here in Miami, Florida. What I suggest is you not only like my video, if you like them, I hope you do, but you subscribe, and more importantly, subscribing, which you can't do, but you still need to do it, is to turn on the notifications. You can't subscribe. You can subscribe and not turn on notifications, but you get more out of me basically if you turn on the notifications, because you're gonna get a little ping, a little email that says, hey, Diego Mendez has a new video, and that video might be the one that saves you money and saves your home. So turn on your notifications, because I keep making these videos, and I promise I will keep making these videos for everybody as we move forward out of this COVID stagnation of an economy into something new, and hopefully people are going to make more money and be able to save their homes and get out of these problems, and we're not going to be talking about this next year at this time. That's my dream. But for whatever reason, right now, that's what we're dealing with. So again, good luck with everything. If you have any questions, please ask. I'm here to assist if I can. Diego Mendez, loan modification and foreclosure lawyer here in Miami, Florida. Thank you very much for watching.